Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek. Well, grains here at mid-session are trying to all push to the plus side. Even soybeans getting some help from corn and wheat over in the livestock futures. Seeing kind of a mixed trade in the cattle right now. Hogs to the plus side. And Scott, I want to start off talking about the cattle market because we have seen a risk-off correction there in that market, haven't we?
Yes, thanks for having me. And it's been a little bit on the severe side, and
Yeah.
the market that's at record highs. And when you start to have some very weak outside news, I think that was the first thing to blame on what's happened here in the last week. Here is, stock market, interest rates, the bond market. We've been a little bit wild, and there's a lot of scared trading action that's happening over there. So a fund with a big long in the live cattle, feeder cattle sector at record highs. There was quite a bit of liquidation from that category, and we were carrying a little bit of a lead on the futures with where the cash was, as the funds were really behind this market. So they've corrected it down to the cash now, and we're kind of at this wait and see attitude a little bit. But every day we look at this stock market down, it's a little bit scary, and it caught some of these hedgers off guard. Maybe not off guard. I'm trying to catch as much of this rally as you can, and when you see this much liquidation and down, it's okay, I better find some protection now. I've got these many cattle here, I got this kind of risk. So it adds a lot more fuel to the fire when you start getting some added hedges on and looking for some protection, diving into stuff just in case it is the big one, and nobody knows for sure. To me, I'm one of those long-term bulls and still think we have some of that news on our side yet, but this correction here is finding us oversold and still worried about the outside markets.
Okay, so what are you watching for support that we would take out and would reverse this trend or turn it over here?
We broke some of these shorter term trend lines and did not like to see that. So I guess I kind of need cash to be the leader. That's what this market needs. I don't know if there's a chart spot that I have in mind that I'm saying, yep, we're going to go all the way down to here, because some of those measurements would be a little bit scary as fast and as much as we've rallied. I mean, you're going to look at some pivotal breakout points on long-term charts. I mean, they're going to be low 170s, and I'm not ready to stand up and say that yet. So don't really have that on the radar yet. I think cash needs to be the king, whether it's the cash feeders, whether it's the live cash cattle. We're going to need to see that market pop back up here to prop it up. It needs some more fuel to feed this bull market that we have and just haven't had it lately.
Yeah, and cash has been a little weaker again this week so far.
A little weaker, but I'm actually a little surprised.
We're
getting some phone calls from some majors and give you some bids. I can take them tomorrow or in 3 weeks. So that's a weird option when you're hearing, okay, I can take these cattle tomorrow if you choose to. Otherwise, we'll put them 3 weeks down the road. So, and the Packers done a great job at managing inventory and making sure they have it out in front of them. But there was cattle loading on that are going to load tomorrow, that are going to for Saturday's slaughter. So there's a lot of stories and cattle moving from point A to point B and C to D and to fill F. It's kind of interesting seeing cattle moving long distances with high fuel costs. So I still stand and say these numbers are tight. They can't be overrun with supply. Otherwise, we wouldn't be seeing that kind of action and seeing all of these packers come out of the woodwork when we're, up against a wall. We feel like with what this stock market has done to us and this large break in the futures, we're still getting some nice bids and guys are taking it. There's a lot of money to be made for these feed yards to sell them at these prices. And, some 184 to a regional, some 183s. We got the 288s to 290s. I'm glad, guys, producers are able to get some cattle sold and the packers want them. So that hasn't changed yet.
So box beef prices, choices fallen back below $300. We seem to always get some pretty good buying interest when we get under that level. Will that be the case again here? I mean, is demand still holding strong?
There isn't just a great chart that says this is exactly what demand is. This is what it's doing. So you always have to try to pick it apart a little bit. And yes, those boxes have corrected some and have found support here. I keep leaning on the fact that this demand is in great shape. We're still getting a lot of movement. We haven't had backup. We've needed to maintain a little bit of a higher price just for some rationing, in my opinion. So with the less supply that we have, that this price is just going to have to be higher. And if it breaks too far, I don't think it's going to take long for it to turn around and rally back to the higher level. Maybe they're going to try to print some lower prices to try to scare it a little bit, but I feel like it's going to find some movement, find some buying. We still have a consumer currently with a taste for this high quality beef. We just don't need any further outside market recession type talk. That's the overhanging factor over all of this. These interest rates are going to catch up with some of this economy, I think, and make it a little tougher. So we definitely have to keep our eye on it and, not ignore the fact that it can get a little bit worse. But as of now, I feel like we're in a good spot. Yeah.
Scott, hogs are back up here today. We had a pretty big correction here after the hogs and pigs report. And now, what are we, oversold, or did we get help from a pretty good export number this morning? I think it was like 43,000 metric tons.
Yep, that's going to help finding some export business, and that's what that market needs. The hogs and pigs report, there was some pretty high expectations for some friendly numbers on that report, and seeing how much liquidation we had, that was what everybody was leaning on. So when it came out negative, caught the market off guard, and it doesn't take the hog market long to correct. It likes to do it in severe fashion. So gap lower and traded lower. And if you look at some of the technicals, yep, we measured down right from that gap. That's about where the lows were here the other day. And we've already rallied all the way back and filled the gap today. So some very large movements in a short amount of time, mainly blamed on the report, catching us off guard. And we just do have plenty of supply around in the front. I think we've got a lot of full barns around. So it's going to be through the fourth quarter and into the first. We're not going to find any holes in numbers. So we still have a lot of hogs to chew through. We're going to need that export demand to pick up if we're going to try to get through some of this tough sledding.
And as I mentioned, as you and I talk, grains are mostly higher here. Wheat's been the price leader. Is that why corn is up? Exports were a little bit better this morning anyways, but we kind of already knew about the Mexico business. So,
right. I kind of think it's a little bit more of that wheat market, seeing the strength over there, and just kind of hearing myself that we're very competitive in the world prices now. With as low as we got on the wheat, do I stand up here and say this wheat has to have a big correction? Yeah, good question. I'm not real sure, but at least it broke the corn out of a sideways range that it's been stuck in for a couple of months. It's been very slow moving, so it's trying to break out of the top side. We still have some older highs that it's got to get through here yet, but seeing a decently higher day, that's really going to help the market. We've had some of the harvest pressure, we're getting some of that behind us. So seasonally, it's also a time that we can start to turn around and maybe move higher, as we've seen a lot of bushels hit the market. We're starting to soak that up pretty good. I think it was a good sign that even with higher than expected yields, in my opinion, that the market was able to just hold that sideways range. Right. Even hearing that kind of news, that it was able to hold. So now you got some end users that have paid a higher price for corn over the last year. This is a little bit of a buying opportunity, saying, I don't want to buy corn what I had to buy it for last year with the basis the way it was and the tighter supply. So I think you're going to get a little bit of end user buying here and maybe pressing that position as we're trying to creep out of the top side of that range. It's just going to create a little bit of movement. I don't have a big, tall upside saying we're going to really put some on here, but it could easily take another 20-cent correction higher if it wanted to.
Yeah. So if we get above 5, though, the inclination we'll have a bigger move, right?
Yeah, there's still some gaps in some charts, and we talked about 520 and 525 for a lot of the summer. It feels like I have to date back to when we started looking at that number. So that's still in effect, the 520, 525. But for me, I'm not looking for anything higher than that.
Soybeans, do we have more downside risk there, do you think? I think the old low is like 1130. We're not going to go back to that area, I would hope, are we?
I wasn't thinking that low 12s is kind of
low 12s,
but we have seen a lot of these beans coming in and moving through. Farmers are selling the beans, going to store some corn. That's a typical movement that we're going to do, and with the high interest rates, that's what's going to happen. So maybe you get through some of that harvest pressure and we can get a little recovery, but a little bit oversold on some of these grain markets. So just getting a little bit of boost off of that. And now we get to start talking about South America and what's all shaking loose there. Too wet here, too dry there, and planting delays over here. So always hard to digest what's happening down there.
All right, let's hope we hold here pretty soon and kind of get worked through this harvest pressure. But the low river levels, the poor exports we had this morning on soybeans, certainly not helping.
No, that's been kind of an ongoing issue with the water levels and movement of these soybeans. And then also you got a strong dollar to boot. That doesn't help us at all either.
Yeah. All right. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.